Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, this time around, going to be way worse than the 1930s depression. How do we know? Because we already have the data. You're not going to want to miss this one. Let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Bob, relatively speaking to the 1930s depression, what we are dealing with here, I don't think anybody really realizes it, but it's way, way, way worse.
Yeah. I mean, adjusted income is lower than inflation-adjusted income in the 1930s. It's unbelievable to me that, we have lost ground from just the revenue standpoint for your family. On top of that, they went ahead and the tax rate, in the 1930s, the tax rates were still fairly low. FICA was low, and I don't even think FICA was even in place till 1932 or 33. And then the income tax rate was fairly low and affected very few people. Then obviously the housing market in 1930 was probably the bottom. But look at this now. It's just like, it's basically, what was that movie? We used to be on TV like all Christmas long, and we had basically the Hooverville. I feel like we're back in that again, where we're all going to be renting from one rich family in every city, and we're going to be just like the rest of the world.
Yeah, I mean, it's pretty wild. As we've shown them, the housing costs are incredibly high compared to income. Taxes paid, obviously. I mean, the numbers above there, guys, are adjusted, inflation adjusted. So in terms of today's values, like what are people making versus what they're paying? So that's not a lie. Home prices were $79,000 on the median. It's like $450 now. So you're getting killed on inflation. You're getting your dollar, your savings is getting eviscerated. And this is why Bob and I tell you got to be in hard assets that are going to appreciate with this inflation, because it's not going away. And I think, Bob, they're going to capitulate. I don't think they're going to get to their 2% target.
And I agree with you. I don't think they're going to be able to get the inflation rate down to 2%. They're going to probably capitulate at a much higher level, because even Jamie Dimon's looking at 7% Fed funds rate before this thing's over. And that still might not be enough. We're seeing ratios that say it should be closer to 8.5% to bring it to 2%. And I think if they take it to that level, Phil, it's lights out. Nobody's going to be able to afford a home. But I guess I'm wrong. Very few people are going to be able to afford a home. And all those people are going to hoover up all the properties that are going to come on the market.
Right.
Because the only people that are going to be able to get homes are basically going to be people with cash, or people that are going to be joining these real estate funds and hoovering up the properties again.
Right.
But I just think that, what we're seeing here is that, America's not used to that. And I think it's going to cause, political chaos.
Right.
This is not simply an economic exercise. And, and you could see it, when you see homes that go on the rental market, like here, anything on a single story now gets sucked up into a rental market. The properties degrade. They don't pay for, lawn care. The owners don't upkeep it like you would if you were an owner of the property. People there's just a lack of incentive to take care of it. And I think what you'll see then is you just see this general degradation across the board. And I think you're going to see cities start to react to that. And it's just going to become nightmare. You're going to see rental control, and you're going to see limits on rental properties, I think, going forward. But that's not the only problem. You got counties that are going to go bankrupt in this environment too. When these properties start to roll over, the counties aren't going to get the tax revenues that they are expecting to receive. At the same time that, and my city is fairly wealthy, and we're extending out, like the road maintenance. Like they used to have every 5 years they would resurface, they do that scratch and resurface. Now they're only doing it on high traffic roads and as necessary. And when they do as necessary, they don't do the whole road. They just take care of a section of the road that needs to be repaired. So you're starting to see this thing across the board. And then even my homeowners association, and I live in a fairly wealthy homeowners association, they're starting to like extend out, like big complaining about tree maintenance and shrub maintenance, common area maintenance, because what they're doing is they're extending out, how often they do some of these things and letting things get shaggier and shaggier. And if that's happening in my town, I could just imagine what's happening in other places. So all this thing is just basically to point out we're stressed and stretched. And what people don't understand, when you have a lot of money, you don't need to spend a lot of money. So that money gets locked up and it doesn't get taxed. You need velocity to create the taxation. And that's why you need a vibrant middle class. And I think they just basically killed the golden goose here. And now you got really poor who get transfer payments, and you got really rich who do everything in their power to bribe government to not be taxed.
Yeah, funny you mentioned that road thing too, because I noticed that in Hawaii, there's you have to do you spray for weeds on the side of the road, that sort of thing. And we had one road that was always taken care of. We went around, drove up it, and we're like, man, what the heck? Like a third world country. Like they're not taking care of some of these secondary roads, like you mentioned. So I have seen that for a fact. I think that's a good clue to see when things are starting to get pulled back a little bit. Guys, what do you guys think? What are you guys seeing? Do you feel it in your wallet? Do you feel like the home prices are just out of control? Do you feel like other costs that you have to deal with are just getting out of control? We'd love to hear from you. I think, Bob, ultimately the it's going to be down to the Fed and whether or not how they could, they're going to capitulate. They always have been. That's been modus operandi for the last 10 years. But, we do have a very serious inflation problem. And so, the stock market's always been their darling. They never let it go. And there's reasons for that. Like we mentioned before, you got pension funds and things like that at risk. But at the end of the day, though, you got to have some kind of consequence. If the individual retail investor makes bad decisions, nobody's there to bail him out. And, where does this too big to fail ultimately lead us or land us in terms of, inflation? Because while the Fed currently is doing the right thing and trying to pull back liquidity out of the market and get the market asset prices down and other asset prices down for that matter, at some point, though, they're going to cry uncle. And I have a hard time believing they're going to let things slip too far into the abyss to depression levels, even though we're kind of dealing with depression levels in terms of relative costs, but in terms of employment and GDP, we're not yet. So, what ultimately they end up doing, we'll have to see. But we do know there's going to be a rocky road ahead.
Yeah, I mean, it's unavoidable, and at some point they're going to have to take the medicine. And you're right, they can't blow the stock market up because that capital gains is such a big part of their taxation plan. So you're going to end up killing velocity, killing cap gains. And the other thing too that people don't realize is that, like, my daughter walked in today and she said, I was at Starbucks, they have masks on again. And she goes, are they going to start, like, she likes to go to concerts, stuff like that. Are they going to start canceling concerts? She goes, I'll be so annoyed if they start doing this stuff, and so you're building this whole generation of people that are just, they don't view the government as a source of protection. They see the government as a source of aggravation. And this is, I said, well, you can vote. And she said, well, I'm not going to vote. I said, well, that's why you get what you get. But, to my point with her is that she's like the Chinese now. There's like this apathy, I'm going to kill you by not participating. I think people really don't understand, if you have somebody between 20 and 30, I think you do. The apathy is just amazing. Like they just view everything that happens to them now is really used to be where you got protected, and now it's not that anymore. So I find it interesting. I'm doing what I can to protect our family, but I'm waiting one day for the light switch, and it's going to be the everything sell is going to hit. I know we're rambling a little bit here, but I'm watching the market today. It's really odd. Oil's up again, the stock market's down again. The 20-year, 30 years is steepening yet on this, and I'm just waiting for just a total puke out. I know we're also oversold at support, so we may get a blow up and then a puke out. It's really going to be wild, Phil.
Right. And again, seasonality has just been on point, weeks September, but we are in for a rally. That's 100% for sure. And I think at the end of today, we'll have it in the newsletter. If you guys want to check that out, you can go to tradegenius.co, but we're probably going to be reporting capitulation levels on market breadth, which usually gives us a pretty steep rally, prevents the market from really rolling off. I mean, things would have to start breaking in mass here for this thing to just start puking. And as you guys see, this market doesn't really do that. It's a lot of sharp V reversals and things like that. I do think, though, that the highs were probably put in July. But that being said, you could still have a week or two rally just to get everybody back on the bull train. But I think damage is done for the bulls for the time being, and I think, like we were saying, the Q4, and especially with this debt issuance starting to come out, hasn't even come out yet, Bob. The debt issuance that's supposed to suck up liquidity hasn't even come out yet, so they're getting started early.
And I think it's goofy footing a lot of people. So.
Right. All right, guys, well, that's going to do it for this video. Thanks for watching. Please hit like and subscribe, and check out our specials and newsletter over at tradegenius.co. We'd love to see you in the room. Thanks, Bob. We'll see you guys on tomorrow's video. Take care.
Trade Genius.